Greetings and welcome to the StockInvest.us weekly update. As we embark upon a fresh trading week, we are thrilled to deliver the most recent stock market news and insights. In this episode, we'll dive into the critical market events for the week and offer a comprehensive analysis of the week that's gone by. Additionally, we'll scrutinize 3 of the most buzzworthy stocks at the moment, helping you stay ahead of the curve. If you enjoy our podcast, please make sure to hit that subscribe button and share your thoughts on this week's episode in the comment section. And if you find our content valuable, don't hesitate to give it a like. We genuinely appreciate your support and eagerly await the opportunity to present another insightful report next week. Now, let's get started. The U.S. stocks ended the week on a high note, with the Dow Jones Industrial Average, S&P 500, and Nasdaq Composite all recording weekly gains, despite renewed concerns over the banking system. Shares of Deutsche Bank, Germany's largest lender, experienced a drop after the cost of insuring the bank against a credit default soared. The rise in the cost of Deutsche Bank's credit default swaps was the highest it has been since late 2018, raising concerns about the strength of European banks. Concerns about the fragility of the banking sector have been percolating following a year of the Federal Reserve's aggressive interest rate hikes. However, the outperformance of megacap technology stocks and other sectors has helped prop up the broader U.S. equities market. The S&P 500 index is up less than 0.1% so far this month. The role of regional banks in the U.S. economy is massive, with their failure potentially leading to slower economic growth and even a recession. Wealth management firm Experian's Chief Client Officer, Sandy Bragger, emphasized the importance of being diversified and defensive during these turbulent times. Holding high-quality companies that should be resilient during poor economic times, including healthcare, information technology, and consumer staples, is a wise strategy, according to Bragger. And now let's dive into the latest news and updates about the commodities markets. Oil prices rose on Monday as investors assessed the impact of measures to rein in concerns about the global banking system, even as tensions in Europe were ratcheted up by Russian President Vladimir Putin's plans to place tactical nuclear weapons in Belarus. Brent crude futures rose 77 cents to $75.76 a barrel, while U.S. West Texas Intermediate crude climbed 74 cents to $70 a barrel. Brent rose 2.8% last week, while WTI rebounded 3.8% as jitters in the banking sector eased. Gold prices fell for a second straight session on Monday as the U.S. dollar firmed, while investors weighed measures taken by authorities to assuage fears of a crisis in the global banking sector. Spot gold was down 0.5% at $1,967.86 per ounce, as of 6:32 GMT. The dollar index rose 0.2% and made bullion less affordable for overseas buyers. Recent stress in the banking sector and the possibility of a follow-on credit crunch bring the United States closer to recession, Minneapolis U.S. Federal Reserve President Neel Kashkari said. As we move forward into the coming week, it's time to turn our attention to the most significant events on the horizon. This week, investors are hoping for a return of stability to markets rattled by bank failures, while also keeping an eye on the ongoing fallout from the UBS Credit Suisse merger. In the United States, upcoming data will show how much the market turmoil is impacting the likelihood of a recession. Eurozone inflation data and PMI data out of China will also be in focus. Many investors are worried that there may be more nasty surprises lurking in the banking sector following the collapse of 2 U.S. lenders and last weekend's forced takeover of Credit Suisse by UBS. With the ripple effects of aggressive rate hikes by the Federal Reserve over the past year, German giant Deutsche Bank has been in the spotlight, with its shares losing more than a quarter of their value this month. In terms of U.S. data this week, there will be a focus on the core PCE price index, which is the Fed's favored measure of inflation, and on consumer confidence data for March. Other reports include data on pending home sales, revised GDP, and initial jobless claims. Several Fed officials are also due to speak during the week. In the Eurozone, the closely watched inflation data is expected to show a slowdown in headline inflation, while the underlying rate of inflation, which strips out volatile elements including food and fuel prices, is expected to accelerate. The banking crisis has prompted fears that lending will slow, acting as a drag on the economy. Chinese PMI data on Friday will be a key focus for investors as they try to gauge the strength of the recovery in the world's second-largest economy following the lifting of pandemic restrictions. In Japan, Tokyo inflation data on Friday will be in the spotlight and is expected to show that inflation has topped the Bank of Japan's 2% target for the 10th straight month. let's shift our focus to the top 3 stocks that are creating a buzz in the market and garnering attention from investors. You can find a detailed analysis of these stocks on StockInvest.us by simply searching for the ticker name. Chipmaker NVIDIA's stock price experienced a dip of -1.52% on Friday. NVIDIA is a key player in the data center and gaming industry and is currently exploring opportunities in the field of artificial intelligence, AI, chips. The CEO of NVIDIA, Jensen Huang, highlighted the importance of AI in a recent presentation and announced various initiatives to broaden the company's reach in this field. After a beat-and-raise report on February 22, driven by its data center segment, NVIDIA is now one of the top stocks that investors are keeping a close eye on. Tesla, the electric vehicle carmaker, experienced a drop in stock price of -0.94% on Friday. The company is striving to dominate the automotive industry in the coming years and has recently declared a price war on its rivals in China and the United States, the world's 2 largest auto markets. In response, Tesla's competitors have lowered the prices of their cars, sometimes at the risk of undermining their profit margins. Despite the increasing competition, Tesla is aggressively increasing its production and aims to produce 20 million cars a year by 2030. First Republic Bank, on the other hand, experienced its 3rd consecutive day of decline on Friday with a -1.36% drop in stock price. The bank shares have been hit hard following the failures of 2 large U.S. regional banks, Silicon Valley Bank and Signature Bank, and the subsequent global bank panic that has ensued. Despite repeated efforts to rescue the San Francisco lender, First Republic shares are currently trading just above their all-time low set on March 20th. Investors remain unsettled about the prospects of the firm and many other mid-size U.S. lenders. And to wrap things up, let's dive into our final topic. Aramco, the world's top oil exporter, has signed an agreement with Chinese partners to invest in a major oil refinery and petrochemical project in northeast China. The project in Liaoning Province's city of Panjin is expected to start in 2026 and aims to meet China's growing demand for fuel and chemicals. The joint venture called Huajin Aramco Petrochemical Company will build and operate the complex, which will house a 300,000 barrels per day oil refinery and a cracker that will produce 1.65 million tons of ethylene and 2 million tons of paraxylene per year. This is Aramco's 2nd major refining petrochemical investment in China after signing 2 other agreements for refinery petrochemical investments before the pandemic. The project is expected to cost around $12.2 billion. In other news, Asian shares were mixed on Monday after stocks on Wall Street shook off a weak start to end higher last week, despite persisting worries over banks on both sides of the Atlantic. The Federal Deposit Insurance Corporation agreed to the sale of the troubled Silicon Valley Bank to North Carolina-based First Citizens Bank and Trust Co., which could raise confidence in the troubled banking industry after failures at Silicon Valley Bank and 2 other banks rattled investors. However, concerns persist that higher interest rates that are squeezing lenders could increase the likelihood of a recession. Deutsche Bank stock tumbled 8.5% in Germany on Friday, and shares of other major European banks suffered smaller declines. The managing director of the International Monetary Fund, Kristalina Georgieva, told a conference in Beijing on Sunday that risks to financial stability have risen as interest rates are raised to fight inflation, underscoring the need for vigilance. Thanks for tuning into StockInvest.us. We hope you found this video helpful in your quest for informed investment decisions. Remember to keep an eye on a stock's fundamentals, financial health, industry trends, and any relevant information or events that may impact the stock price. If you have any questions or comments, feel free to reach out to us via comments or our social media channels. We'll be back next week with more analysis and insights, so stay tuned. As always, please keep in mind that trading involves a high risk of losing money and that you should speak with a financial advisor before making any investment decisions. The information provided on StockInvest.us should not be the sole basis for your investment decisions, and any use of the information provided is at your own risk.